Markets. This is Brad with the Noble Precious Metals Report for July 14th, 2021. And as promised, we have a pretty big day ahead of us. There's a lot going on. So let's get started and see what we can make out of all of this. So on the quick hit board today, we have several major economic reports are coming out. We have the Producer Price Index, and we also have updates to the Beige Book. But what can't be overlooked is at 12 noon, the Federal Reserve Chairman Jerome Powell is testifying. And if you've been in the markets for more than a day, you realize that should have some level of effect. So keep an eye out for that. Now, tomorrow we have our big battery of reports, so make sure to tune in for initial jobless claims, continuing jobless claims, import and export price index, Empire State Index, Philadelphia Fed Index, so on and so forth. But those are going to be definite impact drivers. Just on the quick survey, today so far at 10:28 a.m., the big board is mostly green, which is good. Silver is nicely up, although it seems to be declining just a hair right now. Gold is definitely up. Silver retail is still a little bit off from the previous weeks, but that, depending on your perspective, that's not necessarily a bad thing. And gold retail is still up. So as you can see, I have the Big FinBiz board up, and we can just do our quick survey on that, and we can see that the major equity indices are somewhat up. They're still in that mucus green territory, so they're definitely under that 0.5% mark. But except for the Nasdaq, which is up 0.76%. So it's not a real strong day for equities. However, there does seem to be a lot of very definite opinion having on the energy and commodities market. Energy is mostly down, whereas if you look at its analog in grains, that's way up. With softs and of course metals are kind of sitting in the middle, and metals are doing okay. Palladium happens to be down by 0.818%. Copper is also down at 0.63%. Platinum's up 1.84%. And silver is at 0.84%, and gold is at 0.75% up. So as you can see on the calendar, this is what we have. We have that Producer Price Index. Its previous value was at 0.8%. The median forecast was expected to be 0.6%. However, the actual turned out to be 1%. That's kind of a complete 180 that they did on that one. So they're definitely not, probably not too happy about that. Not that too many are. However, as we start looking at this, Fed Chair Jerome Powell is testifying at noon. And at 2 p.m., the Beige Book comes out. What that's going to say, that's a great question. However, we do want to make sure that we look at it. So tomorrow, we have the initial jobless claims, as I stated, the continuing jobless claims. Are they going to go up? Are they going to go down? Let's flip a coin and figure that one out. My guess is that my gut's saying they're probably going to go up by a hair. But then again, I'm not a labor economist, so your guess is as good as mine. We have the Import and Export Price Index that's coming out. That's going to be a big one. That's going to give us our economic health for how we're doing in relationship to our foreign relationships and trading partners. We have the Empire and the Philadelphia Fed indexes for manufacturing, which are going to highlight both of those regions. We have the Aggregate Industrial Production Index, the Capacity Utilization Index, which is also an industrial and manufacturing number. So going through those are going to tell a lot about what's going on. At 9:30 a.m., Fed Chair Powell also testifies again, and at 11 a.m., Chicago Fed President Charles Evans speaks. So tomorrow should be a wild, wild day, and buckle up and see where things go. So the Treasury report, as we've been watching for the last couple days. On the 9th, we had it at 1.35 as a close. On the 12th, we had it 1.36. And then yesterday, it closed at 1.38. And today, it's still running at 1.38. So it's still flat. However, we are seeing this very definite upward trend on that. And as I've mentioned before, this isn't necessarily a bad thing. We want to see a healthy level of Treasury rate yield. We don't want to see this absolutely too low. We don't want to see it absolutely too high. For right now, it would appear that a good range would be probably over 1.4%, probably like 1.4 to 1.55%. So as soon as we start getting into that average price, that 1.54%, percent return, that's about where we want to top out right now and where the market seems comfortable. Because if you recall, whenever we kind of extended ourselves past this, that's when bad things were starting to happen. We were starting to get a lot of bad vibes economically. There was a lot of panic, things of that nature. And it's all relatively speaking because, of course, no one's in the streets, no one's jumping from buildings at this point. But it's just, we want to make sure that rate is where it needs to be and where it's perceived to need to be. So that's something that, again, we're going to keep on watching. Going through, I do want to pick up, this is from yesterday, the Consumer Price Index that's mapped out, and we can see very definite trends that are moving through here. And really, it's something, I just want to put this on. So if we start out, this is from February 1st. If we look at that point, we can pretty much draw a straight line all the way through. I mean, there was one slight decline, things like that. That's really where the regime changed. Now, in March 1st, and the blue line was the core CPI, which is the basket of goods minus fuel and food. So if we look at everything all together, we can definitely see that same straight line that occurs, only starting in March. And this red line is the actual, the red line is the core CPI. I had that backwards. Regular CPI includes a basket of goods that exists and is surveyed from really urban and metropolitan areas on the increases in prices. When they subtract the value from it for core CPI, from food and fuel, we can start to see how things start to move. So the important part to really take away on this, we're in a period where this is starting to really ramp up a bit. What'll be interesting is as we start to look at this, and if these numbers begin to level out, if these lines begin to level out, where they start taking on more of a gradual curve, such as this or up here, or if they're going to take a much more vertical trajectory, that would be bad. The more level this could be, the better. And that's really what we want to look for. But today's graph is the producer price index. And just so that I don't make the same mistake that I did before, I have two lines that are plotted here. One was reported, one wasn't. The producer price index for all producers. And then, because of course this is a channel that's dedicated to talking about precious metals and commodities of that kind, I've added on the producer price index for just mining, which is a subset of that. Something to just note real quick, the St. Louis Federal Reserve maintains a repository of about and I'm playing it from memory, I believe 280,000 different economic reports that could be pulled from. So on a regular basis, I actually pull these for various timelines. I normally abbreviate it for just a current view to see what's going on. But it is a resource that exists. And if you're ever wondering where a lot of these news sources and things like that get this data from, it's from the St. Louis Federal Reserve. And I really recommend going to that and just kind of exploring some of these numbers even more in depth than what I have, because it would take me forever to be able to provide the level of description and information that they provide. The consumer price, or the producer price index, goes up considerably as we're ramping from April 1st of last year, which was at 185.5. We're now at 228.5. What is the producer price index? The Producer Price Index program measures the average change over time in the selling prices received by domestic producers for their output. The prices included in the PPI are from the first commercial transaction for many products and some services. So essentially what this is this is a metric that is created based off of domestic production and first sale prices. So as that line rises, the simple conclusion is prices are rising. That's really about it. So coming from the factory, this is where they're coming from. Now, on the mining side of things, as we can see, we've had, and this isn't just gold, silver, copper, anything like that. This is all mining operations within the United States. So anything that's precious metals related within the United States would be a subset of this. But as we can see, we've had some periods of ups and downs. February and March, we were definitely up on prices. We had a dramatic decline between March and April, and then we're pretty much back in the same realm. Just things to keep in track. In general, the big takeaway on any of these is we're heading in an upwards direction. First up on the markets today is our silver price. So let's see what's exactly happening. And I'm just zooming into this week just to remove some of last week's cruft. And we can see definite shifts. We had talked about a lot of this yesterday. But as we started getting into later in the day, as we started moving into around 8:25 a.m. yesterday, we got into this high, we got to the dip, we started going up again. But then we kind of had this reversal right around lunchtime. So I don't know if anyone got hangry or not, but they definitely decided to do a little bit of a sell-off, which pushed everything below the VWAP into this -2 standard deviation band, where it really hung out until most of the evening, until today's current day trading. 11 o'clock at night, we finally kind of crossed over. We then we're hanging out for quite a while, and it wasn't until really 6 o'clock this morning, 6:15 this morning, when all of a sudden price decided to take off. And it continued to climb all the way up. And what's interesting is what correlates with that. The producer reports weren't out until, say, 8:30 a.m. The CPI report and data from yesterday was out at 8:30 a.m. yesterday. So it wasn't like there was a definite action that occurred. So the interesting game that I like to play is, figure out what caused the reversal and what was it. Because there had to be something that got a lot of traders that said, hey, you know what, I want to start buying some silver today before the day's events. And it's possible that they were purchasing in advance of the price index coming out. Because again, one of the things that we're also dealing with, there isn't a significant amount of volume at play here. as I've said for the last couple of days. The volume that we're seeing and the volume that we're dealing with is incredibly small. A few thousand contracts are really shifting the price considerably. Seeing something like this, not that big of a deal to get momentum going amongst basically the pebbles. The boulders are still just hanging out, waiting to see what's going on. But as we got into 9:30 this morning, that was about where we hit our peak. We started to decline, and that's really where everything was. And I believe that the decline, if I were to kind of speculate here, and again, I'm just pulling this out of my nether regions. If I were to speculate, I'd say that a lot of the decline just occurred in conjunction with market open, market data that was coming out, what was the reality of how prices were shaping up, things of that nature. So it all kind of made perfect sense. But what is funny to watch is we're holding on right there, right at the tip of that +2 standard dev band. So we bounced right off of it. So if we overlay onto it, the previous day puts us quite a bit higher right now at current price, and even the intraday, we're still riding above the intraday on it. So both of these are good. And the gold futures, same thing. I'm just going to zoom in a bit. We can really see a very similar type of action to it. We had that same kind of price nastiness that went on yesterday. We didn't quite get as low because, of course, the VWAP is in a different position. So the prices are relative based off of where the strength is and everything else. We can definitely see where things started to appreciate quite a bit. The price adjusted well above the 5-day VWAP. We started moving upwards still. Right at that 8 o'clock mark, we took a pretty significant jump. What was that? Probably around almost $10. And then continued to climb until, now we're down a bit. But we're still in a pretty good range. But we're still well above that 5-day mark. So if we look at the previous day, we're well above the previous day. And if we look at the intraday, we can see where the intraday, we bounced off it just a little while ago, and we're heading up above that. So gold is actually in very strong territory today, as long as it keeps up this momentum. But again, not to beat a dead horse on it, the volume is not significant. And that's something that we just have to keep in mind. So looking at the 5-day performance, I'll throw gold on here just to see where things stand. We can see the relative comparison. Silver is up over the last 5 days, 1.66%. Gold is up 1.05%. So both of them are in positive territory, which is always nice. And then, of course, our gold-silver ratio, which is at 69.1 for the market-to-market, which is actually considerably good. I like that. It seems to be moving in the right direction, things of that nature. And again, it's still below 70. The retail-to-retail pricing, or the ratio for that, is still above that 60. And part of it is the relative retail weakness of silver versus the relative retail strength of gold. So we start to look at that, and that's where we start getting into this ugly convergence that's occurring. So in the silver analysis, we can see our retail chart is up on the board. And if you're an astute, long-time viewer of this channel, you'll notice that I've made some changes. In addition to yesterday's aesthetic changes, I also blew this up a bit because I realized that even as I was doing editing and rewatch and things of that nature, these aren't really clear for someone who's not looking at this on a monitor like I am. So I did some tweaks across the board with some layouts, things like that, just to make this a little bit better and really identify and highlight some of the changes and things like that, so that hopefully this becomes a little bit more obvious for you as I explain it, and it's not quite as nuanced. But diving in, we can see that in general, as I had stated, silver is still, the retail silver on the benchmarks is still pretty low. It's still in decline over the past, really the 2 weeks. So if we look at generic silver, we're at 31.38. The previous week was 31.64, so that's a pretty significant decline. And we're even down from 2 weeks ago at 31.51. So going through, I mean, pretty much all of the benchmarks hold up that way. Even as we go into the venerable American Silver Eagle, 2 weeks ago we were at 42. Last week it had bumped up to 42.32, and right now we're at 41.82. So that's pretty much almost that's 49-cent drop, which isn't bad. Again, if that's something that you're looking into, if you're on the buy side of this stuff, the prices do tend to be declining a bit. If you're on the sell side, well, I apologize. If we start looking at the average silver price, so let's look at the item price for this, and we can definitely see. Let me just put a line up on here, and starting from last week, and even connecting in on the average, we can see a slight incremental increase on this particular average. However, it's something that, it's almost flat. There's almost nothing there that's that highly moving that pushes it way up. Just something to keep in mind that the prices are good. It's really a buyer's market if you can find it. Sellers are kind of softening a bit. But if silver has a day like it has today, and if it keeps on continuing with this momentum, don't look for this to last too long. Gold is definitely up. It's almost the opposite of where silver was. We can see that even if we're at the American Gold Eagle, the 10th ounce, that's 27.13. Up from 2 weeks ago, it was at 26.70. The 1 ounce generic 2 weeks ago was at 18.65. Now it's at 18.93. That's a pretty good return in 2 weeks. If we go to, say, the Maple Leaf, 2 weeks ago was at 19.09. Now it's at 19.28. So we have these definite price appreciations. They're going up, and it's doing pretty well. So in conclusion today, we know that we have a big week ahead of us. We're in store for some movement. I'm not sure which direction it's going to go into yet. There are just a lot of things that are determining on it. However, with the reports that are coming out and the reports that have already come out, we can definitely say that things aren't as positive as they should be. Certain areas there is some positivity, other areas there really isn't. So we need to really be careful. Just look at everything the way that it is, and really try to be nimble about how we're purchasing, how we're selling, and be ready for the unexpected. Because the way things are lining up right now, it's very possible that it could either go up quite well, or we could be facing a pretty decent length of time where the prices are just kind of hanging out doing nothing. I've talked long enough today, so I think that that's going to do it. And until next time, tune in. And if you like what I'm doing, like, share, and subscribe. Do all that good stuff. And happy stacking.